Well, it's interesting, what's being seen in the markets today, because we've already seen a very decent run, a sharp run year to date compared to last year, and Asia's driven a lot of that emerging market outperformance. Our point is that, the question really is a lot of the good news already in the price, because when you look at the beginning of the year or in December last year, valuations were really very cheap. We were getting some good quality companies trading at single-digit PEs, and those valuations have now run up, which makes us to believe that prices are now reasonable rather than being cheap across the board. But there are still some cheap areas. So it's important to focus on what's fundamentally still giving you that value. And maybe it's time for the markets to take a bit of a pause right now, because what we know is all in the price, it looks like that.
So you're saying this is not a time to be adding to risk assets?
We are saying that, we've seen a lot of that dry powder put to work already. You need to be selective because risk on is still very much in mode. I was traveling last week meeting some of our European clients, and it's still very apparent that Asia is very under-allocated too. So there's a lot of interest coming there. But at the same time, investors are cognizant that places like China, especially on the A-share side, have seen that very steep outperformance. So there are pockets in Asia, especially the smaller emerging markets, even India, where one is still finding good value. Though the market has reached highs recently, it lagged emerging markets overall.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.